Currently, the crypto market has turned red. That means things are going on sale. But what happens inside financial markets when things go on sale? That is, cryptos, stocks, indices, commodities. When they go on sale, people don't run in. They run out as fast as they can. This is the exact opposite of what we do in real life. The sale is on inside financial markets. We'll discuss this and much more in this coming video. If there's only one thing that you learn from this video, don't be afraid of the red. Just get prepared, increase your knowledge, and work on your courage. Those things will make you a fortune inside financial markets. The Fed's role inside the economic system and its global impact is severe. If the Fed increases interest rates, it could easily push the economies of the entire world into recession. However, an increasing number of economists, including the Federal Reserve's own staff, are predicting that the US will escape a recession, though it will be well into 2024 before anybody can be sure of it. Inside the masterclass in LV31, I covered off some very key signals that you need to look for to determine if a recession is coming or not, and the economic system is very healthy. Here's another particular data point that you can look at. When we come into recessions, there's often a very big spike in unemployment, as you would expect. That has so far not occurred. There's a probability of one more rate increase by the Fed in this year, and then cuts next year. Goldman Sachs is penciling in for the first rate cut for the second quarter of 2024. In fact, next year, Fed swaps show over 100 basis point rate cuts priced in for 2024 and 2025. The US 2-year yield and the US 10-year yield are very important to look at. They give an understanding how interest rates are changing. When interest rates go nuts, that is basically go through the roof, it makes it so hard for anybody to afford any line of credit. Loans simply dry up. When they go to zero, exactly the opposite happens. That is, when interest rates go to near zero. Interest rates drive the economic system. One thing to understand, technological innovation drives economic systems up, and we're currently in the middle of a boom in artificial intelligence, but it doesn't just stop there. We have blockchain, cryptocurrency, robotics, quantum computing. So many things are coming, including interstellar space travel. It's said financial markets climb a wall of worry, and we can see a wall of worry out there. It's also important to recognize that all of the problems with yield curve control, and especially in the inversion of the 2 and the 10-year, are largely as a result of all the global supply chains breaking due to the pandemic. Things are starting to normalize now. The Fed was always trying to bring demand and supply back to equilibrium with each other, and if you have the same demand but you have very, very little supply, you're going to get a problem. So the Fed embarked on demand destruction, and it did quite a good job. When supply chains break, what it means is the existing stock becomes much more valuable, therefore inflation hits. We're seeing a normalization now in inflation because supply chains are coming back online. In the main markets on Friday, we saw sector performance just narrowly down, 0.11%. Energy was the best performing sector, information technology was the worst. We can see that the semiconductor sector was the hardest hit in the last trading session in the main markets. Global markets are keeping a really close eye on what the Fed does with the federal funds rate. There's an 88.5% probability that the Fed won't increase interest rates inside the US economic system for the next meeting on the 20th of September. I'd like to let the members know in the CTKS method service, all of the tiers are now out. Tier 1, the engine of financial markets globally. Tier 2 and Tier 3. All the indicators and videos have been released inside the service. Each month there are 27 videos actually put into the service, and also 27 indicators updated with objective dynamic market structure, which does change every month. If you're inside the service, please go to 00 and area 4 if you do not have the TradingView indicators as yet. Knowing where smart money is buying and selling is incredibly important, and there's no better way to determine real support and real resistance than looking at the CTKS method. Why is that the case? Because the CTKS method marks up charts through objective dynamic market structure, or ODMS, to reveal a thing called CTKS structure, and it's embodied in this indicator. When we mark up the 2-year yield, the US 2-year from 1988, what we can see is that there was a smart money buy level and a smart money sell level. What happened? The 2-year yield just jumped from one to the other. It's having difficulty making it across this particular barrier because it's a barrier that's been there for quite some time. This is not recent indicative price. This is a completely new way of looking at support and resistance levels, the true support and resistance levels. And many thanks to Brunner. So grateful for this episode and for the CTKS method service. It's an absolute game changer. I've only recently started with the masterclass, which is so packed with knowledge. And as I am learning, I am getting better at marking up my own charts. The service has been the most valuable tool for my trades. Thank you very much, my friend. If we don't know where smart money is buying and selling, that can be a big problem. Here, we've marked up the DXY since 1967 with the CTKS method. We can see there's a structural level of smart money sell at 102,921 in terms of the DXY. We often see that price, in terms of any price chart, is always rebounding SL to SL. If it can go above, it's going to the next one. If it can't get up to the next one, it's going down to the one below. And stronger lines indicate more and more either support or resistance. Right now, the US dollar is trying to get through this smart money sell level at 102.92. If it makes it up, it's got another resistance level at 102.95. This is very important to understand where smart money is looking. They're not looking at recent indicative price, they're looking at market structure. And the CTKS method shows market structure. The CTKS method also applies not just to yields, but also to commodities. And it just applies to any price chart, in truth. When we look at silver, which has been marked up since 1802, we pop on the indicator, you can see a smart money buy level at around that 22.62 mark, and a resistance level at 22.82. It's very important to know where the real structure is inside the market. If you don't know where it is, you're guessing. Looking at gold, which has been marked up since 1883, when you look at a price chart like this, it's very difficult to understand where the true support and true resistances are inside the market. In order to get that information, you need market structure. So let's pop on the indicator, and what we see, gold has good structural buy support around the 1911 mark, and it's got structural resistance at 19.19 and 31 cents. And you can see many times it tried to get through here and is being rejected. There's a very big difference to know what the structural levels are and to not know them. And the beautiful thing about the CTKS method, you can learn to do it yourself. You learn it once and apply it to any price chart. US oil is a very good predictor of inflation. Typically, when US oil goes up, we would expect inflation to follow. They have quite a relationship with each other. They're like best friends. They love to hang out. As oil is coming down, we would expect this to flow through to yields and inversely impact silver and gold, and also the stock market, and also crypto. Always remember, price is moving in a wave. Don't let the down wave chill you out just before the up wave comes in. That's what smart money does. It scares people. When we look at US oil, it's been marked up since 1861. And where are the buy and sell levels? We can see that we're just below once buy support, now a little bit of resistance at 82.79. The next buy level is down here at around 82.59 and then 82.45. We saw that oil tried to get above this particular area of smart money sell resistance at 83.62. It did for a while, but it couldn't overcome this resistance at 83.80. And what happened? We got a bit of negative air in here. If it's not going above, where's it going? It's going below to the next SL. You'll find this very, very simple rule will make you a fortune. What is this rule, you say, Ken? It's Rule 654. Prices move SL to SL. What's an SL? It's not a stop loss. It's a Stanfield level. What's a Stanfield level? Stanfield levels are these lines drawn through objective dynamic market structure, also called CTKS structure. You'll see it all the time. Price rebounds from SL to SL. If it can't get above, it's going below. If it can get above, it's going to the next one. SLs are actually formed in Level 2 standard certification. Level 1 gives you the foundations. Level 2 gives you the whole entire structure. A lot of people think it must be easy. Hey, they're just horizontal lines. Looking through L1, you can see there's a little bit more to it. What about L2? L2, or Level 2 certification, is where all the magic happens. And you can see there's quite a bit in it. To draw up these lines correctly, you need to be very accurate. Therefore, when you see one of these lines actually drawn, it's a pretty time-intensive process, but it's worth it. You're putting your hard-earned money on the line. You should at least know where smart money is looking to buy, and you can see it right here, and to sell. It happens all the time. When the markets are turbulent, you really need to know where the safety nets are. There's not just one level of support and resistance. There are actually many. When we turn on the smart money support indicator for the NASDAQ, which has been marked up since 1973, we can see the NASDAQ is currently at reasonably strong support through this 13,623 level. It's come down, and what we know, if it can't get above an SL, it's going below. But this SL has actually stopped price falling further. If we get a technical bounce up on the NASDAQ, and there's a lot of signs pointing to really good economic health on the horizon, this wouldn't be surprising at all. But what typically happens when investors and traders see red inside the market, they run, and they run like hell. For example, when a person just new to trading and investing sees a market that looks like this, or even worse, is all red, the first instinct they have is to sell everything. Throwing their arms up in exasperation, they say, "Oh, this stuff is not for me. I just can't get it right." You might recall recently SHIB did a bit of a run up. This would actually call people to SHIB. Now it's down over a little over 5%. Professionals actually do everything opposite to retail. They buy when the percentages are in their favor, and when the percentages are not in their favor, they wouldn't dream of touching it. Please let me know in the comments, what is the rule the CTKS global family is famous for? I would like to thank you for watching and for commenting. I'm very grateful. We have an incredible global family. Looking through the top cryptos, we can see it's basically red at the moment. However, there are always opportunities inside every single market. You just need to know how to find them, how to identify them, and to track investor attention. The top gainers in the past 24 hours are Rune, Ton, Zek, Pepe, Maker, HBAR, Vet, Fracshare, and Monero. The greatest losers, top 100 past 24 hours, Bone, SHIB, Axie, Rocket Pool, OKB, Doge, Solana, Sand, and IMX. One thing that you might notice, you get particular groups hanging out with other groups. This is very, very important to understand. It can make all the difference in your synchronization. In yesterday's video, we looked at Bitcoin and we were saying, is Bitcoin going up or Bitcoin going down? Up to where and down to where is the most important question that you can ever answer inside financial markets. Bitcoin is currently trading at 29,310. There is smart money sell resistance at 29,560. And a good level of smart money buy support around that 29,258. You can already see when price was just selling down, it became aware of this smart money buy area. And you see it all the time. Price is always reacting to these SLs, these Stanfield levels. Sometimes people get into absolutes. Was the market going up? Yes, it did. Did the market come down? Yes, it did. Did the market go up? Yes, it did. Did it come down? Yes, it did. Did it go up? Yes, it did. Did it come down? Yes, it did. It really depends on your time frame and what you're looking at and what you're into in terms of your investments and trades. There are no absolute rights or wrongs when it comes to financial markets because they're incredibly volatile. Yesterday, we also asked the question, what about total crypto market cap, which has been marked up since 2014 with the indicator? But a concept first, let's just discuss this. We can see the total crypto market cap came down. Wow, boy oh boy, did it come down and how? But why did it stop? And why did it stop there? The answer is CTKS structure. Look at this. There's a really strong buy level in the market around that 1.127 trillion. Price reacted to this. The entire crypto market reacted to that specific level. This is why it's so important to understand where those levels are. It's human nature to run away from the market when the market goes red like this, and it's human nature to think everything is fine when the market is going up. But what people also do is they say, oh, why didn't I buy down here? I could have bought it so cheaply and I could have sold it up here so expensively. I could have bought the bottom and sold the top. You never need to buy the bottom because there is no absolute bottom. Things are always moving in a wave. You just want to buy the sweet spots. You can look at CTKS structure to figure out where the guide rails are. But when you look at this, I can assure you that 90% of the crypto population was saying, oh, I need to get out of here. And then as soon as prices came up, they were saying, oh, fantastic, everything is good, buy, buy, buy. And then it goes down. They say sell. Then it goes up. They say buy. Then it comes down. They say sell. Then it goes up. They say buy. You get the idea. Unfortunately, nobody ever talks about this, and I don't know why. If you want to be more of a financial blessing to yourself and those you love, you must disconnect this desire to run away when you get the stoplight. You must run into the burning building, and that is very, very hard to do. You need a lot of knowledge and you need a lot of courage. Don't do it without knowledge. When a firefighter goes into a burning building, they have all the safety equipment on. You need the safety equipment of your knowledge, but you must also have courage. It's not sufficient to only have knowledge. You have to be bulletproof emotionally as well, and this is possible, but it does take time. The key is to think about financial markets like you'd think about a good sell. A good thing that's on sale. Here you see all these people. What do they want? They want TVs. When do they want them? Now. And why do they want them now? Because they're cheap. They're on sale. But when you get into financial markets, somehow the brain gets disconnected from this reality. When good things go on sale, people say, I'm out of here. I'm only going to buy when it's way, way more than I should pay. Right now, things are on sale inside different markets and people are saying, wow, it's on sale financially, so I better run. Just try to rewire your mind to think like a retail shopper. When the markets come down, hey, you're getting a bargain. We buy on red when it comes to consumer goods. In fact, we want a really, really good deal in order to be consistently profitable. Inside financial markets, you need many skills. Perhaps the most important one is to know where smart money is buying and selling. If we pop on the indicator for Bitcoin Cash, we can see there's a smart money buy area at 228 and a smart money sell area just up here at 230. What happened with price? Price went above, tapped this level, this 230 level. It couldn't get above, so what did it do? It came below. Price is always moving SL to SL, and you can ride these waves very, very profitably if you understand where the actual CTKS structure is. A big thank you to JT for your very kind comment. JT looks into the CTKS method service, especially the tier 1s, but he watches all the tiers to understand likely price directions and to get ready. Starting with the tier 1s and look into the intercorrelations is the foundation to any trade. Next, look at the project you intend to trade, analyzing the 3 possible outcomes, and then decide on placing your orders. Don't forget to check the dates of important economic announcements as they could impact your efforts. Thanks for sharing, Jay. We know no alt can escape Bitcoin's gravity, and when we look at Bitcoin just recently, we know it's coming up to 2 smart money buy levels, so that's quite encouraging. We also know the total crypto market cap is coming up to support. A lot of people would be bailing on the market right now, but we're looking at the market with keen interest. We can see that this gravitational play on Bitcoin plays across all of the alts, and it's very important to understand how this gravity moves with an alt, and you can see XRP and ETH are moving with Bitcoin very, very well. When they diverge, it can tell us a big story. Divergences are very, very powerful to understand, and we can see Tron often shining in the darkness. Now it's coming back to normalize itself. Bitcoin's gravity will normalize everything eventually, and that's why we say no alt can escape Bitcoin's gravity. That's the normalization part. Professional traders and investors, when the market goes on sale, hey, we're like at a Boxing Day sale. We just go and grab it. But we do so with knowledge. Training your mind to profit from volatility is not an easy thing to do, but it's very, very worthwhile. We do it when it comes to shopping, but we don't do it when it comes to financial markets. How crazy is that? From time to time, you see memes like this. The psychology of people, what is it? When the price is high, they want in, but when the price is low, they're not really interested. This is only for financial markets. Everywhere else in life, this would not apply. If the TVs were 70,000 and they were going on sale for 3,000, you'd have the line right here, not over there. Psychologically, do everything you possibly can to unwire this craziness. It doesn't work for you. Also, knowing how to trade is vitally important. As an investor, you would buy and you would sell. You have a particular time frame. It could look a little bit like this. As investors, we're likely to hold through just about anything because isn't that what investors do? They just hold on for dear life. However, there could be a better way, and actually there is. It's gaining the ability to actually get in and out of positions. For example, if you are unlucky enough to buy Microsoft shares on the 3rd of January 2000, you would have held for 5,750 days up to October 2015 and still made a 6.5% loss. But what if you were actually moving with the markets price pressure as it came up and down? You can see some of these returns are fairly significant. You don't have to always just hodl. And a lot of people say, oh, but Ken, taxes are just terrible. I don't want to pay tax. Well, generally people don't want to pay tax. But we kind of need to keep everything moving. But the concept is this. It's like saying, I don't want to work because I have to pay tax. Well, is the tax 100%? No, it's less. Okay. Well, maybe it's still a good idea. It's like everything in life. We must put in the hard work. Unfortunately, people think that they don't have to work hard at anything, just things will materialize. Yeah, well, positive inspiration is good, but the hard work will get you across the line. Just understanding that if you could get just half of these percentage returns, you would end up with 10 times more than what you would have here. Well, actually, a lot more than that. Just being conservative, because conservative is a good thing. You could say that this person was an investor and this person doing this up and down movement was a trader. Traders and investors, same activity, exactly the same. You buy and you sell, just different holding periods, and of course a very different attitude. And you might say, oh Ken, I don't have time. These are 3 monthly candles, these are quarterly candles. It really just comes down to the knowledge and then the emotional mastery. The key then becomes, what do you need to learn? You need your foundations. You need to know how all the charts intercorrelate and interconnect. Then you need to be able to find investor attention, finding the market's focus. There are very specific ways to do that, especially enhancing your pattern recognition. There's so many ways to buy and sell, but if you've not mastered emotional control first, you won't be able to participate profitably in any of them. This is the structure of the CTKS Masterclass. Let Me Know Barry has very kindly offered a CTKS partial masterclass scholarship. At times like this, when there's great uncertainty in the market, focus on your learning. Purpuratum has also kindly offered a CTKS partial masterclass scholarship. You can apply for these scholarships in the link in the description of this video. The masterclass is pretty big, but it represents nearly 40 years inside financial markets and knowledge transfer. It's not some rebadged lesson on something. It's all innovative. For the masterclass students, it's really important to go and revisit the content. You will be very surprised what you pick up time after time going through the masterclass. Some people have been through the masterclass 6 or 7 times, and they're always finding new gems. Why are they finding new gems? Because they're different. They can sense what they didn't know before. If you're currently going through the masterclass at the moment, please take your time, do every lesson in sequence, and don't skip anything. I hide gems in what could be classified as boring videos. But none of it is boring. All of it is there to help you to succeed in financial markets, not just for now, but for the rest of your life. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.